there's a large dependency on cards for obvious reasons, good reasons. But it also brings a price tag to it. But it's also a value exchange, right? So how can you convert a customer from going to the website, going through the whole booking funnel, and then checking out in a secure way where they feel comfortable with? But then also, there's a price tag to it, and the margins, like you said, are thin. But there's also a lot of technology that's required to make it all work on a global scale.
This is Converge,
a podcast from Convera.
Come with us as we shape the future of finance.
Welcome to yet another episode of Converge here on the floor at Money2020. This is day 2. I'm happy to have a few great guests, a panel today recreating from a stage talk that this group did together recently. We have Andy Davies, the Global Head of Payments at Endava, and Paul van Alfen, who is the Managing Director for Up in the Air, as well as Melisande from the Paypers, who will be basically moderating this episode and recreating the panel discussion that they had on stage. So great to have all of you. Thank you so much for joining Converge. Melisande, without further ado, take it away and give some context for today's discussion, which is titled Addressing Payment Headwinds at 35,000 Feet.
Lovely. Thank you so much, Alex. And yes, let's start with, because this is the industry is not really well represented here, by the way, at the event. So let's talk a little bit about sort of the nature of this business, because it's interesting to look at airlines because they are global by nature. I think they were the first to really pioneer with accepting payments from consumers and businesses globally. And then secondly, it's a low margin business. It's capital intense. It's human intense. It's just a very intense industry. There's stiff competition and the demand fluctuates. So they struggle, and I guess COVID was also a big bash for the industry. So what we will discuss today is a little bit the payment headwinds. So what are the challenges in terms of payments, which represent a large chunk of their cost? But we will also talk about some of the latest developments related to their distribution networks, to IATA initiatives, and basically the shift of airlines moving into more retail models and marketplaces. And I think it's interesting to see whether it's, the luxury brands or airlines, all have sort of the strategy to go more direct to consumers. But it's challenging. And we discussed a little bit about there's not one model. There will be always like direct and OTAs that have a big chunk, basically an important role in selling airline tickets. But let's start a little bit by exploring these payment headwinds. Let's start with cost. Maybe one of you can start with what is this, the cost component, and what is the challenge for airlines?
Yeah, I think if you look at the characteristics of payments for airlines, obviously, like you said, Melisande, it's a global business typically, or regional. It's cross-border. It's multi-currency. It's high average transaction value that comes, especially in case of cards, which charge like a percentage of the value at high cost, but also the costs around compliance and security also play a role in there. It's by nature it's a costly exercise, and it's also because of the characteristics. Payments are made for airlines at the time of booking, and that could be easily 3 to 6 months out. When the actual travel takes place. So we're talking about also the risk involved that for instance, the airline is in the end not able to deliver the service, or the travel operator. So there's also cost tagged to that. So that means that historically, travel overall, and starts already in the 50s, 60s of the last century, has been dominated by cards, by credit cards originally. And most of the technical infrastructure is built based on the cards networks, right, on the 16 digits. That travel across all the systems, the legacy systems, but also are able to be used at the airport, at a kiosk, in flight, in a mobile, etc. So there's a large dependency on cards for obvious reasons, good reasons, but it also brings a price tag to it. But it's also a value exchange, right? So how can you convert a customer from going to the website, going through the whole booking funnel and then checking out in a secure way where they feel comfortable with. But then also, there's a price tag to it, and the margins, like you said, are thin. But there's also a lot of technology now that's required to make it all work on a global scale.
Absolutely, and that it's bringing that complexity together that adds additional overheads and more headwinds for the airlines. How do you think about those scenarios you talked about? I've got an in-person payment, so how do I pay in the airport? Maybe for baggage overage or for additional services. I need to pay online to book the ticket initially. Most airlines are offering apps now, so that I need to think about the app flow as well. But then also in the air, how do I think about that in the air payment? That quite often they're offline transactions. But if you overlay within that as well, there's additional complications in the fact that airlines have to collect additional data about who's flying, where they're flying to, ages, all sorts of other information that the schemes mandate as part of it, making it a hyper complex environment when you compound it with the multi-regional aspects as well. So I need to process in the US, in Europe, in the Middle East, wherever my customer's buying the tickets the most. So you end up with this jigsaw puzzle of technology you've got to bring together that just compounds that complexity and that ongoing cost with it. I would say the other aspect that many of them have to consider as well is the operational impact of managing these payments. So what happens if my flight's cancelled and I need to get a refund or a transfer? How do I manage changing details? How do I manage change of price of ticket if someone changes the flight? All these add this additional back office complexity to consider in the equation. And lastly, you touched on the different buying channels. So historically, people bought from travel agents or they bought from the evolution to OTAs. And now most of the airlines, like many businesses in retail and other industries, are now going direct to consumer. So now I need to think about I'm not getting rid of the other channels. I've still got my booking agent on the high street. I've still got my OTA, and I've got my direct channel. And I've got to figure out this spider's web of money moving left and right and up and down. So yes, definitely complex.
Mm-hmm. And Andy, you mentioned the complexity of things like refunds, and that also adds with all the legacy systems that they have to work with. What were the learnings from the COVID period? Because I think that was the first time that airlines were really, confronted with a massive number of requests for refunds. And so how did that play out? What did the industry learn from that?
I think the airlines weren't alone with that. That impacted the whole travel industry significantly. Holiday bookings, hotel bookings, flight bookings. And we've talked about how there's a combination of these coming together anyway over time. I think it highlighted some concerns, especially as we talk about the concerns and also reassurances. So one of the reasons why people use cards is there's a fallback plan. I know I can actually go to my card issuer and request a charge back if I'm not getting a refund. So one of the things that this triggered, and it was learnings not just for the airlines, but for the card schemes as well, is how do I manage that refund situation? So in scenario one, the airlines want to give a refund back to the customer, but how do they manage that bulk of big cash outlay overnight? And then when the money didn't flow through quick enough, most of those customers after a period of time will have gone to the card scheme. So that creates a knock-on effect to the card schemes, who then introduce that to the issuing banks down the chain. So there's a whole daisy chain of people impacted from that one payment channel. But the one thing that cards does keep people comfortable with, and I think we'll talk about this throughout this conversation, there's a comfort factor there that travelers are happy to use it. And I think this is one of the lessons that some of the bank-to-bank based payments can start to think about and learn about is how do you offer those same security benefits within other payment mechanisms? And once those start to come through, I think we'll start to see a transition and a shift away from just pure card transactions.
Yeah, let's talk a bit more about the other forms of payments, because we talked about it with Carol that the fact that there's little control about the current cost, which is primarily credit cards. They're very keen to looking into other forms of payments like open banking, potentially SPA, EPI. But what is your take on that? When do you think these other less costly cost of payments? Will there be more adoption, or how do you see that develop for airlines?
Yeah, I think definitely. It all comes down, and we discussed it during the panel yesterday as well, to it's the adoption that actually drives the benefits, right? If you have a lot of potential benefits on the merchant side, for instance, with open banking, if the adoption is very low or zero, then the results on the bottom line are still very low or zero. So there needs to be a value change, right? And if you look at the characteristics of payments in travel, it's prepayment. There is delivery of a service 3-6 months later. It's a large amount. So any form of credit, if it's buy now, pay later, if it's a credit card, for a booking during a promotion in January for, let's say, travel in August or July, will help the consumer to spread that. So, for instance, open banking, although there are very many very valid use cases for it in travel, the money leaves your account right away. If there's no protection, the fact that it's very cheap for the merchant, it's not really playing a role for the consumer, right? So it needs to be incentivized, and we touched on this yesterday as well. Recently, Revolut introduced Revolut Pay for airlines, and Aer Lingus, who we had on the panel yesterday, is the pilot for that. And I think the good thing what they did is to try to find this middle ground by adding security, protection, that non-delivery of service, by adding some rewards, by having a very strong brand as well, by the way, and having demographics in their customer base that already are used to travel. For instance, also making use of Revolut due to like the low cost for currency exchange. I think they have found this sweet spot. And yes, it comes at a price tag. I think the rack rates are like 1% and 20 pence, something like that. So yes, it's more expensive than open banking related or account to account. But if it drives adoption, then it could be a very good trade-off. And I think Carol said yesterday that in Ireland, Revolut is massive, and probably I'd be using Revolut as an example, but I'm pretty sure other neobanks will follow. I think that's where you see that, hey, it's balanced between the customer side and the merchant side, so that it drives adoption. Because in the end, also the merchants, the airlines want to drive sales, right? So what's required to make it work? What's the cost of doing business or cost of sales? And so not look too only at the direct cost. Take a step back, take a holistic view, and see how it can benefit your business, and try to step away from that single-mindedness about cost.
Because I think you raise an important point about there's a balance here. There's a number of these new payment methods that are a little bit too swayed towards the merchant. And a common conversation I have, you can build the best payment rail on the planet, but if no one wants to use it, it's as good as useless. So you've got to have this balance. And we talked on the panel yesterday about striking a balance between cost and consumer sort of preference. I think the thing that works with the Revolut example is Revolut's pretty much dominated the travel industry as a travel card. Therefore, they already know the customers. They already have customers that are using them to drive these types of transactions. So they can look at the data. They can see they're buying airline tickets. They're buying hotels. And this is a good fit. And it's an example where a consumer's already bought into the Revolut brand to deal with their travel. And therefore, a airline or a hotel adopting it as a payment mechanism creates that balance.
And maybe it's good to explain that what Revolut does actually have the customer enter their 16-digit number, then identify that's a debit card, and then basically suggest to take it off the card rails onto the account-to-account rails and make it kind of an on-us transaction.
Yep.
And therefore skipping, let's say, the scheme fees and bring it in-house. So I think that's an interesting move. And it obviously, they don't have global coverage, and it doesn't apply to all use cases. But I think in the case of Aer Lingus, I think it's a very interesting move to make, and I think it will work well for them.
Well, and we are seeing this as well. We're seeing Visa, MasterCard, Amex all converge on similar conversations at a scheme level. MasterCard is investing heavily in real-time payments rails. Visa, with the Tink brand, they've got open banking capabilities in there. Amex is investing in there. We've seen all sorts of changes to the Amex payment rails as well. So I think it's very much a reality that these things are going to come to the fore, and don't expect it to be from just one place. I think you're going to see banks, and you're going to see schemes, and you're going to see other new payment methods coming to the front.
I think another aspect here is that what I hear at other conferences is that although maybe the merchants are not affected by fraud, I think in the UK there are a number of cases where account holders get tricked into being redirected to a fraudulent website and getting losing a lot of money, right? So
APP,
protection
yeah.
and it's not as risk free as it's presented, I think.
This is one of the big limiting factors, I think, for many of the open banking transactions that are quite often triggered by a type of link-based service, pay-by-link type service. The issue is that it's really easy to spoof, and it's causing a whole scaling up of fraud. Now, the regulators are moving in on this. The regulators are stepping in and starting to say, well, look, you need to provide a level of protection, a level of underwriting. But I still think it needs some evolution. And the other thing as well, we got to look at this. I took part in a conversation recently that was bringing together what's the US doing versus UK, Europe versus Asia versus Australia. And UK is very much being used as a bit of a spotlight. What's the regulator going to do? What rules are they going to set? We'll let them test it, and then we'll start thinking about it. But we've seen the Fed evolve with FedNow in the US. So again, there's mechanisms coming there. And I think this is an interesting one as well. We have to go back to the cost point. The cost of a transaction in Europe versus the cost of a transaction in the US on cards is radically different. So again, we were talking to Carol yesterday on Aer Lingus front. One of the challenges is how do we fix this problem in the US? So when you've got a customer buying a plane ticket in the US, it's very different from buying the plane ticket in Europe. And they've got different problems to deal with across that cross-border aspect of things. We're on the Convera stand here, and that's very much at the heart of what these guys do a lot of as well with the cross-border processing.
And I think I mentioned that yesterday as well. I think the dilemma a little bit for the airlines here is that also Aer Lingus has a co-branded card in the US where they make a lot of money off, but they also pay the merchant fees. So typically within airlines, and though you see that the KPIs are split up, like there's a cost center and a profit center, and maybe they should have a holistic strategy on this if they talk about costs. So not only take the win, but also accept the losses.
There's a careful balancing act there, isn't there? There's a lot of benefit to having the co-branded card. There's a lot of focus on what the benefits that drives. So if you can make that model work, then take the pros with that, and maybe don't try and.
I think Delta is forecast to make 10 billion US, I think in 2027 of their card. So if you look at the total cost acceptance by the airlines worldwide, it's 20 billion. So but that hardly ever enters the conversation. So I think there's a love and a hate here in this discussion.
You can't have your cake and eat it. If you've got
So true. So let's move a bit from the payment cost to sort of the future of airlines and payments, because there's a number of initiatives, among others from the IATA, that help airlines to move into more business models. Can you elaborate a little bit on these initiatives?
I think like we discussed about 25 years ago, the airlines started to sell directly on the website. Initially, there was like a interesting new development, and they put a team of young people on it to make it work. Now it's become integrated part of their distribution strategy, the sales strategy. And along the way, they already start to sell, first to unbundle, right? And to sell, for instance, a seat upgrade or a seat selection upfront or speedy boarding, those kind of things. And they've moved more and more into becoming a retailer, sometimes even a super app like AirAsia, the example I mentioned yesterday, where you can actually, do ride hailing. You can order food. Oh, by the way, you can also order a ticket. That's something they do on the site, but it's all on the AirAsia brand. So airlines are moving more and more into the direction of the travel intermediaries, the travel agencies, the online travel agencies. And with that comes also a responsibility for actually delivering the service, but also accepting payment, but also delivering the service and doing the customer service, for instance, for these additional services as well. And what I find very interesting is that they will also move then more and more into automated B2B payments, because in the end, you can't stick to doing monthly invoicing manually. If you really want to do this at scale, you need to probably start, creating and sending like virtual cards, for instance, because these suppliers also want to have real-time confirmation. They want to also have automated processes in place and not have a room full of people, sell a lot of stuff on the front door, but then have a room full of people to manage it manually. That's not going to work, right? So I think that's where probably the next generation, let's say, of airline payments will be in that area.
Basically, more becoming a marketplace in a certain.
That's the word I was going to use. Exactly. It's the marketplace model. We're seeing so many industries lean into this, and the airlines is a really good example. I mean, principally, they're taking what the OTAs have done for a number of years and generating for them a more direct to consumer model. It's about keeping ownership of the customer. Apologies. So that marketplace model, and if you start thinking about how that needs to work, we always talk to clients about there's three big building blocks. I've got, how do I collect the money in the first instance? So we talked about that, the cards versus open banking versus other new payment methods. But in order to take the transaction from that position, I need to think about, well, what am I collecting payments for? So to take the example of a holiday booking might be a flight, a hotel, and car hire. So I'm taking 3 transactions, merging them into one, and then I need to work on the second part, which is holding the money. So I put that in a single bank account, and I hold that in a virtual bank account, a holding place. Once I've moved it there, that's point 2, I then need to figure out how I pay those suppliers. So how do I pay, let's say, Radisson or Hertz and myself? So I've got my own internal payment, I've got my rental car payment, I've got my hotel payment. I need to disperse those payments. Now, they might be in different countries, in different currencies. So I take a single booking in euros. I hold it in a bank account in euros, but I need to send it in USD and GBP and euros out to my various different bank accounts. So there's a whole FX play within the B2B transaction avenues that exist within that ecosystem as well. And that takes that complexity we were talking about earlier and really compounds it.
And do you think there's a factor of be careful what you wish for?
Definitely. I think get them right. There's great opportunities. We're seeing some tremendous examples in the industry about how businesses have successfully embedded the whole payments management ecosystem together. I mean, Shopify is used as an example in the retail space, where they own more and more of the merchant ecosystem. So when I buy a retail store online, I can borrow money from them. I can get a card from them. I can take my card transactions. I can do my open banking transactions. And these are generally powered by big fintech platforms underneath them to provide the rails for that. And if you look at Shopify in that example, 80% of their business is now payments. So they've turned their entire business on its head. It's now more of a payments company than it is a retail company.
Yeah. Look at what happens here around the corner at Booking.com, for instance.
I just wanted to mention that, Booking.com, which has a massive fintech department. But do you see these examples happening in the airline industry as well? I mean, you mentioned Shopify, there's Booking.com. Do you see airlines moving that direction?
From a compliance perspective and licensing, stuff like that. I think the travel industry, because they were a pioneer, I think if you look at IATA, they've been license free for a while now, but there will be more scrutiny, I think, moving forward.
I think definitely we're seeing PSD3 coming in. PSD2 caused lots of problems in this space. If you look at the evolution from PSD1 to 2, the first people that got caught in that was those businesses that were operating marketplace models. They were typically processing in a non-regulated environment. They were managing the transactions quite freely and openly. PSD2 came in and allowed them to carry on operating, but they had to follow some rules. So when you start following those rules, it creates friction. Now, there's 2 ways to solve this. Now, if you look at what the big players did, so let's say think about Uber and Airbnb, because they're kind of relatively close to this environment. So they had to become regulated themselves, multiple licenses, multiple countries. But it's not the only way to solve it. If you look at how eBay decided to take this challenge on. So when they sold PayPal, they needed to still carry on operating as a business, but they chose to outsource all the regulation. And they run most of that. It's an open story. They run most of that on Adyen. So there's a two-fold model. Do I become fully regulated, or do I pick a partner?
Yeah.
And I think the answer is somewhere in the middle for airlines, because they've got this complexity of the different geographies. So if I want to run in the Middle East and in Europe and in the US, I might want to run a bit of a hybrid model.
Yeah, and knowing that most of them will start from scratch, probably a fintech platform is a good way, because then the infrastructure, licensing, everything is already there. And then once you grow, you can always decide to take it more in-house.
And
Definitely.
I also feel that if you really become a marketplace and customer-centric, there is not only the technical part that is a challenge, or the license or the scrutiny, it's also becoming really customer-centric. I mean, Booking, if you use Booking as an example, or another agent, they are just, the UX is very simple. Whereas sometimes if you compare that with an airline, you have to go through too many steps in order to, book your flight, do maybe an upgrade, a seat, do some other services. So I think it's basically it all starts with that customer
Unbundling to the max.
Unbundling to the max.
Yeah, keep the customer journey simple, slick, but don't forget actually the extended ecosystem. I mean, one of the challenges the OTAs, Paul touched on it earlier, one of the challenges the OTAs run into is okay, so if I book a hotel with a big hotel brand, I can set up a nice technology link and APIs and move money backwards and forwards. If I'm booking a small B&B in the middle of Italy somewhere, they're not going to have any technology to connect to. So this is where the virtual cards come in. So there's different ways to pay both, or collect the money from consumers. It needs to be clean and easy, but you need to think about the people on the other side of it as well. So how are you going to pay those vendors? And that has to be kept clean too.
Well, thank you all. That was a very insightful discussion. Thanks for bringing it to us after your stage panel. Much appreciated. Really great to hear about the headwinds high in the air and broadly in the travel industry that are impacting payments, and the many innovative solutions solving for them. So thank you so much for joining us today, guys. Much appreciated.
Thank you.
Thank you.
Thank you.